Welcome to thestockminute.com. I'm Brian Johnson. We are ready for a new week of trading. Thanksgiving's over, bellies are stuffed, people are ready to get back to work. And so we'll see where the markets decide to open them at. We have some conflicting data that will be coming out. I think they will find that Black Friday went very well for the retailers. However, we do have the Ireland bank problem looming overhead. So which one's going to win? The problem or the good news? Bad news, good news. We'll have to wait and see. Monday morning should give us an indication of where we're going to go. Coming into the holiday season, I'm always more neutral to bullish on this time of the year, just because it is the holiday season. You can see the consolidation we've been putting in. I changed some lines, took out some lines, added some lines, and this is where we're at. I think this is a very, very fair representation of what we're looking at, and that is just a big consolidation that we've seen over the past week and a half or so. And you can see we're waiting still for the breaks above here or below there for any kind of more major entry. I'll be watching that very closely, especially if you're a more conservative trader or looking at maybe saving your money and making the best entry possible. It'd be one of those two places. If you're an intraday trader, we have had some good volatility, which has given us runs to the upside and or blasts to the downside. Just keep in mind that we are now in a very, very neutral area stuck between these two marks of resistance and support. I would highly recommend you wait for those breaks. As it is, we are still trapped between the 20 and the 50, which is what we have been working on the past, like I said, week and a half. Wait for that break before you take your trade. I would say below the 11,000 or above the 11,200-ish area or so. Just above this little 20 here should get you in a pretty good position for your trades coming into the holiday season. NASDAQ 60-minute, same type of thing. However, I will tell you that the 60-minute is starting to look a little bit more neutral to me than it is neutral to bullish at this point in time. Would really like to see it hold the 2150 area and get up and over this area to get more bullish on the market itself. So we will wait and see if that helps us in the first part of next week. Any breaks back below here, there is a ton of support below us with moving averages galore. And as you can see from what we've been watching, we do have lots of moving averages below us here as well. We are not trapped between the 20 and the 50 on the NASDAQ. We are above the 20, not one, but 2 days in a row. Obviously lending its hand to a little bit more neutral to bullish look if you're looking at a daily or a weekly chart. However, those 60-minute charts are a little bit more on the neutral side for me right now, and that's why I will wait for the break one way or the other. Coming into the new week, we'll see what the traders decide to do with it. My expectation would be that eventually Ireland will take whatever bailout is given to them, and that coupled with the good numbers coming in from Christmas time, should give us a boost coming into the December time frame, which starts just next week. It's already December of 2010. Amazing to me. NASDAQ weekly as well, holding up very nicely, looking very much like a little bit of a pullback here. If we do get any further move to the downside, watch carefully the 2060 area in the NASDAQ. SPX 60-minute doing the same type of thing. We will watch this overhead blue line. It may coincide eventually with this 1200 to 1205 mark by the time it gets there. Once again, keeping in mind we have the lower area of 1175-ish and the overhead area of 1200-ish that we have been working on. It is just a very, very clear consolidation here by the market, stuck in a trading range between the 20 and the 50 on the SPX, waiting for a break one way or the other to make your move from a more conservative stance. Weekly held above or at the 200-week moving average. That will be ever so slightly lower as we open the day tomorrow. So put it at 1189 to 1188 on the mark. That'll be an area that the bulls will obviously want to hold by the end of the week. Keeping in mind we are back to a full week of trading again, so we should maybe see a little bit more volume pick up into this next week of trading. Once again, keeping your eye on the 1175 and 1200 areas for your trades. VIX on a daily looking, once again, consolidation here, but holding consistently up and out of these, out of this wedge pattern that we've been watching now for many, many months. And you can see now we've had a break. only to swoop back into it. A break. Will we swoop back into it? You guys know what my mark is here. It's really above that 2350-ish area, looking for a close on the VIX up and over that area. And the more it consolidates, the more bullish it looks. So we are in quite a quandary here within the markets. We have the VIX that looks bullish. Typically, a big move up in the VIX means a move down in the markets. We are coming into the holiday season, which would make the markets in most cases more neutral to bullish. So the direction of the VIX should coincide with the direction of the markets. If we get another big push down and back into this area here, this falling wedge, obviously the markets have a little bit more to go to the upside before we see any kind of a move in a different direction. Otherwise, breaks above this 2350, more than likely going to signify some sort of a move to the downside in the markets, leaving us with one more push downwards before we get the holiday bounce. From a weekly two, up and out of this wedge. Now, we've been able to hold this area very, very nicely on the VIX, but I want to bring your attention to the fact that we not only moved out of it, but we actually managed to close out of it by the end of the week. Once again, adding a little bit more bullish tint to the VIX. But you know how I am with these type of moves. I like to give the bears a chance to get that back into the area that we've been following. So let's see if the VIX decides to move downwards this week, if it'll come back to at least test this blue line before any further move in the VIX happens. Apple 60-minute changed some lines here. Want to watch this lower line. This is giving me the same type of look as the NASDAQ is, and that is a little bit more neutral on the 60-minute as opposed to a bullish or a bearish look. However, daily still looks very good. And the weekly still looks very good on Apple as well. But as you see here, our marks are clearly our lines are clearly marked here. Below that 310 and above that 320 are what you really want to keep your eyes on. Especially from a weekly, this consolidation has been very, very nice. Do notice that we were in a consolidation like this a while back, and it lasted many, many moons before we finally got the break. We could end up coming down and up, and we could do this now for the next couple weeks. However, coming into the holiday season, I would expect Apple to maybe, if it's going to, see that breakout to the upside sometime over the next couple weeks for sure. FAS 60-minute, little blue line coming down here, held that blue line as of last week, looking for pushes below 21 and or above 2250 for your marks to the upside and the short side. From a daily, I think those are a very, very fair mark as well from a swing trader's basis, but you can see how ugly this has been to buy and hold on it for any length of time. If you caught it towards the top, the short side has been good to you. Otherwise, over the last week or so, it's been very, very difficult to swing trade this because every time you wake up, it's a brand new world for the FAS and the FAZ. I did draw in a little bit, got a little bit more detailed for you within the FAZ market. By the way, if you enjoy more lines like this and you like to see a little bit better picture of exactly what's going on in the markets, this is exactly what I do for my subscribers. The daily viewers don't get quite the lines that I draw for my subscribers because I've got to make it value added somehow. Otherwise, there's no point in being on the subscribers list. So if you enjoy the extra lines that I draw into these charts, you'll absolutely love the subscribers videos. It really does give you a much better picture of exactly what's going on in the markets. Here's a great example on FAZ. This is the channel we've been following now for quite a while and staying with it on a very, very strict basis, looking for breaks outside of it. Notice how we had one only to touch the 50 and retreat quickly back into it. Pushes back above 1260. I would watch closely the 1280 and above that then the $13 mark. My entries really on a more conservative basis would be up around the 1285-ish mark before you go long, and then below $12 to the short side. And I think that works very well from the daily as well. Notice how we have this bigger line flowing in through here though on the daily. A break above it, a break back below it, only to get right back above it. So, actually, the FAZ looking a little bit more on the bullish side at this point. The bears are absolutely going to want to get this thing, I should say, the bulls are going to want to push the bank up so that the FAZ goes down and gets itself back below this blue area. Watch for strength in the banks. I think they could be ultimately the big deciding factor coming into the new week. I will be back with you again tomorrow night, and we'll reevaluate where we think we're going to end up by the end of this week. See you then. Bye.